Hi there, are you afraid of losing all your money when starting futures trading? Here, I'll teach you 5 things you must do to increase your effectiveness. Let's do this. Number 1. Get the knowledge. If you don't quite get the concepts of support and resistance, timeframes, leverage, and fees, just stay away from futures and hit the books. The futures market is complex and can be tough to grasp without the necessary knowledge. Support and resistance levels are price points at which supply and demand are strongest, which can indicate entry or exit points for a trade. Timeframes refer to the timeframes used to analyze the market, from short-term charts to long-term ones. Leverage allows traders to trade with a greater amount of capital than they have available, which increases both potential profits and losses. Fees are the costs associated with trading in futures markets, such as commissions and margin requirements. Having a solid understanding of these concepts is crucial for making informed decisions in the futures market. Number 2. Plan your strategy. If you already have the necessary knowledge to trade futures, then you need to develop a strategy. After understanding the key concepts of the futures market, you should develop a solid strategy to guide your investment decisions. This may involve analyzing past price patterns, determining support and resistance levels, setting profit and loss targets, and defining the level of risk you are willing to take on. Having a clear and well-defined strategy can help you make more informed investment decisions and reduce the influence of emotions on your trades. Number 3. Start testing your strategy. Before risking your capital in the futures market, it's important to test your strategy in a safe environment. Paper trading or demo trading allows you to test your strategy with fake money, which allows you to evaluate its effectiveness and make adjustments if necessary. This way, you can improve your strategy and increase your chances of success before risking real money. Number 4. Stay informed. The futures market is highly sensitive to news and economic events. For example, a government decision or a company announcement can have a big impact on futures prices. It's important to stay up to date with relevant news so that you can adjust your investment strategy if necessary. This will allow you to make more informed investment decisions and be better prepared for market movements. Number 5. Respect your strategy. The futures market can be emotionally challenging, especially when trades don't go as expected. It's important to have discipline and respect your strategy at all times. Set stop loss and take profit orders to limit your losses and gains, and stick to your limits. Having a well-defined strategy and respecting it will help you make more informed investment decisions and reduce the influence of emotions on your trades. If you've made it this far, I'm going to give you an extra tip that I consider the most important, but first, if you've enjoyed this video, please give it a massive like, subscribe if you haven't already, and comment down below with any other tips about futures markets. Number 6. Never, never, never invest money that you can't afford to lose. I know it sounds obvious, but I assure you it's the main cause of financial problems in the trading world. One reason for this is that there are no guarantees in trading or investing. There is always a risk of losing money, no matter how well informed or skilled you are. In fact, statistically speaking, the probability of losing money is often higher than the probability of making a profit. By investing money that you can't afford to lose, you are putting yourself at risk of financial ruin if things don't go as planned. This can cause undue stress and anxiety, which can negatively impact your ability to make sound trading decisions. Thanks for staying until the end and see you in the next video.